what we've seen over the last sort of 3-4 weeks in terms of the equity rebound, what we've seen is a lot of, if you like, good news about the curve flattening around the world, economies opening up, and obviously that stimulus flowing through, to Main Street. I think what we've seen over the last sort of week or so is we're now starting to see the economic data come through, and that's the real concern. So now we're going to have, 2 to 3 months probably of bad economic data, and we need to see how the markets handle that, because I think another Fed deal is priced in, probably around that sort of 2 to 3 trillion mark. But once that's done, there's very little good news coming for equities.
What do you like then at the moment if you hold positions in equities? I note that you say you're diverse at the moment across large markets like India, China, Japan and Australia, but all of these economies are going to be hit significantly from the downturn that we're seeing.
Oh, look, the reality is every economy is going to get hit. No one's adverse to it. And it's just really picking the best of a bad lot. For Australia, the expectation is a fairly strong rebound from Q2. So if Q2 GDP shrinks by about sort of 10%, the expectation is sort of flat to marginally positive in Q3. If you compare that to, say, Malaysia, where the expectation is about still minus 5% in Q3, it's really about trying to choose those economies and markets where they can rebound quicker. I think that comes down to a few things. Obviously, the level of stimulus which is flowing into the economy and the efficiency of that stimulus. A lot of the stimulus is not efficient, but that's a whole other discussion. And secondly, how deep was the curve in terms of the infection rate, and how quickly can we get back to normal? So in Australia, we are seeing a relatively quick bounce back because our curve was much lower than the rest of the world. So, I think it really is picking the best of a bad bunch. The problem is around the world, you've got earnings uncertainty now, and that makes it very hard to put a fair valuation on any market. So with that earnings uncertainty and with the strong bounce back at the moment, I think you've got to remain a bit defensive until we get a bit more clarity on the economic data and until we see valuations normalise to reflect that earnings decline.